Hello and welcome to Business Incorporated. Well, the midweek trade, that's moving along at this time. Here's what's coming up in the next 25 minutes. Algiers prepares to host Africa's trade gathering, expected to unlock billions in investments. And the Central Bank of Kenya unveils revised risk-based loan pricing model effective from September 2025. Plus, Ghana seeks to restructure a digital ID authority for enhanced law enforcement. It's great to have you join us. I'm Ladi Williams. Let's get a quick check on what's playing out with the markets that we track, starting with the commodities. Now, we're seeing oil still under pressure at this point, $67, looking like it might lose this $67 level and maybe head off to 66 at this point, 0.22% down. That's for Brent. WTI crude from earlier today was also down. We're seeing it also under pressure there, 0.22% down. The U.S. Special Envoy, Steve Witkoff, on Tuesday said he'll meet with Ukrainian representatives in New York this week, adding that Washington is also in talks with Russia as it seeks to end the war. So both contracts fell more than 2% yesterday, and it's all on the back of geopolitics at this time. Let's go to get a quick check on what's playing out with the metals market now. We're seeing, uncertainty creeping into the markets now. We're seeing spot gold up 0.5%. And U.S. gold futures also in the green. The lone loser right there's platinum, $1,344, down 0.39%. And we see spot silver trying to make that run again to $40 per ounce. We'll see if it hits this time. Still all about geopolitics there, moving markets at this time. To other stories now, we'll start off in Kenya. We'll see the Central Bank of Kenya has introduced a revised risk-based credit pricing model that will go into effect starting September 1st. That's 2025 this year for all new variable rate loans, with existing variable rate loans transitioning to the new system by February 28, 2026, following a 6-month implementation window. The reform follows consultations launched in April 2025 with a diverse group of stakeholders, including commercial banks, development partners, industry associations, and non-bank financial institutions and consultancies in academia, corporate entities, and individuals whose input was factored into the final model. Meanwhile, Kenya's banking sector recorded a combined profit after tax of 260 billion Kenyan shillings in the first half of 2025, even as loan defaults continue to climb. And that's according to latest data also from Central Bank of Kenya. The strong earnings were driven by higher interest income, increased non-funded revenue, and cost management measures adopted by lenders. Industry analysts note that the sector has benefited from sustained credit demand, particularly from businesses seeking to expand operations. However, the Central Bank of Kenya warned that the rising level of non-performing loans remains a major concern. Defaults were largely concentrated in sectors such as trade, real estate, and manufacturing, reflecting broader economic pressures, including high inflation and weak consumer spending. And Ghana's National Identification Authority, NIA, could soon be placed under the tutelage of the Ministry of Interior on a permanent basis, opening the possibility for stronger collaboration between the ID Authority, law enforcement, and security agencies. This will happen if a legislative amendment by the government there sent to Parliament eventually gets the nod of lawmakers. At the moment, the ID Authority is not attached to any specific ministry, and this has resulted to what authorities call limited collaboration with law enforcement and intelligence agencies. And Zimbabwe's dairy industry achieved a historic milestone in July, producing a record 10 million liters of milk, the highest monthly output in recent years. Figures released at the ongoing Zimbabwe Agricultural Show in Harare indicate a steady growth in the sector, which had previously averaged 6 million liters per month over the past 4 years. The latest record positions the country on track to produce over 120 million liters of milk this year, up from an average of 80 million liters. This growth comes as producers benefit from government support and partnerships with development agencies. I guess the cows there are very busy in Zimbabwe. All right, also in South Africa, the 4th edition of the Intra-Africa Trade Fair, or IATF, is expected to generate around $4 billion in investment across the continent, and that's according to Algeria's ambassador to South Africa. His Excellency Mr. Ali Kool. He made the remarks in Pretoria. The fair is scheduled to take place next month in Algiers. Our South Africa correspondent, Innocent Samosa, has more. Take a listen.
At the Algerian embassy in Pretoria, Ambassador Ali Achwil outlined Algeria's preparations to host the 4th Intra-African Trade Fair, saying the event is set to reshape continental trade and unlocking multi-billion-dollar opportunities.
Inter-African Trade Forum will be a very good and very big event because it will reunite almost 40,000 participants, 4,000 exhibitors, and it will generate almost $4 billion contract between the businessmen and from all Africa region. And I think it will be a very good occasion for the Africans to meet, to exchange their experiences.
Ambassador Achwil also reflected on the current state of relations between Algeria and South Africa, highlighting areas where new opportunities for cooperation could emerge.
We have now a new law of investment in the mining sector, which where South Africa is very excellent in this field. We can get from or learn from there about their experiences. They can help us, and they have also many other fields where we can exchange. For example, energy, electricity, high education, health, many. I think we are working together, and I have in this take this opportunity to thank our South African authorities for their help and support in my mission.
Ambassador Ali Achwil has described the event as more than a gathering. He says that this is a step in the right direction in transforming economies of African nations. He spoke, of course, about issues around economic growth and, of course, industrialization in the continent. From Pretoria, South Africa, Innocent Samosa, Channels Television News.
Thanks, Innocent. Let's get a quick check on what's playing out with the markets now. Starting on the African continent, there we're seeing weakness for the NGX, 8 basis points down. But we got some earnings earlier today, and that's from Africa Prudential PLC. It announced strong performance for the first half of 2025, posting a 75% year-on-year growth in profit before tax, about 1.98 billion naira compared to 1.13 billion naira recorded in the same period of 2024. The unaudited results released in Lagos showed that profit after tax rose by 73% to 1.35 billion naira from 779 million in the corresponding period of last year. Net total income also increased significantly by 64% to 3.3 billion naira against 2 billion recorded in 2024. And that's latest earnings from Africa Prudential PLC. Should put that up for me. But all right, to the Johannesburg Stock Exchange, 101,974, 0.45% down, a bigger drop than what we have there on the NGX. Let's look at other parts of Africa now. Let's see what's happening in North Africa. That's the EGX 30. Let's see what's happening there. It's green, 0.28%, 35,456 points. And Nairobi Stock Exchange, that monster rally continuing there with the close yesterday, 1.14% up, 172 points there. Let's look at the Gulf region now, see what's happening in the Middle East. We see the sentiment in the Middle East from yesterday. It was mostly red there, and most of those markets were struggling yesterday. That's talking about the Middle Eastern markets, but it's positive territory we're seeing for UAE, 0.31%, up 0.14%, up for the Abu Dhabi index. Let's look at Saudi Arabia and Qatari index now. It's red in those markets, 0.32%, 0.58% down. That's an intraday trade right there. All right, let's take it on to the U.S. now. See, stock futures are flat. Today, they were flat as investors turned their eyes to Nvidia. Everyone's looking out now for what's going to happen with Nvidia earnings for the second quarter of 2025. And definitely, we know the tariffs impact, about 25% on Indian shipments, all of that driving sentiment right there in the market. That's talking about the U.S. markets. Then let's flip over to Asia now. We're seeing Asia Pacific. They closed mostly mixed, breaking ranks with Wall Street and investors assessing, China's latest industrial data there. So we see the Nikkei 0.30%. That was a close. The Kospi 0.25% to close. Then the Hang Seng Index there, that was down 1.27. Let's get a check on other markets we tracked there. And we see it's a drop there for the Nifty 50, 1.02%, but still holding on to the 24,000 level. The Shanghai 1.76% down. All right, but let's circle back now. Let's get a brief summary of how the markets in the U.S. played out.
Market rebounded on Tuesday as many investors are hopeful that this is a positive sign, and this is going back to what was started last week with the major gains in the U.S. stock market despite the setback on Monday. As investors are watching to see what will happen with the Dow Jones, as we saw upward tick of 0.3%. And the S&P 500 was also up at 0.4%. And the heavy tech NASDAQ saw a gain of 0.4% as well, as many investors are watching the earnings reports of companies like Nvidia and hopeful that this could be a positive sign for the next few days and weeks ahead with the U.S. stock market.
Oh, thank you for the update there, Maria. Well, let's get on to Europe now. Look at the markets in Europe. We're checking in with Lars Holter in Berlin. Hello, Lars. Good to have you.
Hello, Lottie. Good to be with you.
Fantastic. What are markets saying today in Europe?
Well, it's really boring if you just look at the indices here. We're seeing the DAX literally unchanged right now. It has been down for most of the morning, but only by tiny fractions. So there's really not much movement. And it's the same picture in London with Paris doing a little bit better. The concerns are the same, that uncertainty over trade, over the Fed. But we also, as for the German markets at least, we did get some fresh numbers out here. Consumer confidence has dropped for the third month in a row now. And it's pretty clear that that's related to those worries as well. In fact, the lower consumer confidence is likely to have a negative effect on spending as well. So I said earlier this week, it seems more and more likely that if we ever do see the DAX breaking out of its current trading corridor, it will be to the bottom. And a correction is something many are talking about in Frankfurt. Now, this most recent data now points to that direction. Of course, unclear when we will see such a move. But I got to say, despite the current high DAX in general, the mood isn't really too good.
All right, let's have a look at, trade now, since I was seeing, boring trades there with the investors. Relationship between the U.S. and the EU have been troubled, in the past few months. What's behind the ongoing problems right now?
Yeah, Ladi, it's been really frustrating. It's been months now that, of course, U.S. President Trump has disrupted trade around the world by levying those random tariffs on other countries. Weeks of uncertainty followed. A few trade agreements were signed. One of the major deals was, in fact, between the U.S. and the EU. It was a very controversial agreement, as we have at times discussed here. But what's even worse, it hasn't improved anything yet. One example, the U.S. has promised to lower tariffs on car imports from the EU from 27.5% down to 15%. That actually never happened. And now Trump says it might not ever happen as long as the EU doesn't deal with its digital taxes. A seemingly unrelated problem entirely. What's he talking about? Well, the EU has the Digital Services Act and the Digital Markets Act on its books, and among many other things, they say that online giants have to pay taxes in the EU on the business they're doing in the EU. Of course, that mostly affects American companies, Alphabet, Meta, Apple, X, formerly known as Twitter or Amazon. And fighting for his companies, Trump is threatening to escalate the already ongoing trade war now by saying that if we don't get rid of these digital taxes in the EU, he might ban high-tech exports to the EU, including chips and other technology.
All right, but definitely love to unpack that. But where does that leave the EU? Will they end the digital taxes?
No, Ladi, they won't. Brussels has made it very clear that it won't do any changes to the Digital Services Act or the Digital Markets Act. These days, that is not something we should take for granted. Canada has actually promised the U.S. not to levy taxes on revenue U.S. online giants make in that country. On the other hand, the United Kingdom has a 2% tax on such business, and that's still in effect, even though that country has also signed a trade agreement with the Trump government. If indeed one day such taxes would actually go away, it might be because the OECD has long argued that digital taxes should not be levied by countries individually anyway, that due to the global reach of the internet and the difficulties administrating such taxes, of course. Rather, the OECD says there should be a global framework on how to assert taxes for multinationally operating companies. Now, that doesn't sound like something the Trump government would like either, of course. Meanwhile, the uncertainty in terms of US-EU trade remains, and weeks after an agreement was signed, it's actually unclear how the transatlantic trade relation will look heading into the next, well, it's still almost 4 years.
All right, I guess all eyes, we still have to watch and see, what plays out with the trade wars at this time. Thank you so much, Lance Halter, for the details.
Thank you, Ladi.
All right, let's get a quick check on what's playing out in the crypto space now with digital assets. Definitely, we're still seeing pressure on Bitcoin. Yes, keeps hitting new lows from what we've seen play out in the market so far. And I'm guessing that the market might be entering fear, at some point. That's talking about what we're seeing with the drops there with Ethereum and Bitcoin. And Bitcoin, that's leading the charge there when it comes to those losses now. But let's get to another conversation now. The U.S. recently passed the Genius Act, a landmark bill giving legal clarity to stablecoin backed by U.S. Treasuries. While this might sound far away, its ripple effects will be felt across Africa. Stablecoins are already critical for remittances, cross-border trade, and savings in dollars. Let's bring in Justin Ziegler now, co-founder and CEO of Juicy Way. Joining me via Zoom. Great to have you on the show.
Pleasure to be here, Lottie.
All right, so, definitely we're seeing weakness with Bitcoin so far towards the end of August. How are you seeing the market play out?
We're seeing Bitcoin being weak over the past few weeks, but over the past 5 years, it's up 90%. We forget briefly that it was a $10,000 coin just 5 years ago, and now it's over $110,000. However, the cryptocurrency that I'm most interested and excited about is actually stable coins. It's coins that keep a stable price as they move forward. And I think that we're seeing with the U.S. legislation, Genius Act, some meaningful changes there.
All right, and talking about the meaningful changes there with Genius Act on stable coins, but I guess the bankers are still quite worried, at this point. The bankers, I've heard, talks about some banker associations in the U.S., saying that some of these stablecoin issuers should not be able to provide yield to customers. So if you're keeping your stablecoins, with them, you shouldn't make interest, but because they're afraid that that would take away business, from the banks. How are you seeing that?
Yeah, that's also right, Lottie. And I think that's a meaningful change. But we're also seeing companies like Coinbase doing credit systems as a means of providing benefits to users that hold stablecoins, even if they're not getting traditional yield. So you might not be able to earn interest on your stablecoin, but you may be able to get credits and benefits from holding them. And so why is it important that the US passed a Genius Act for a country like Nigeria? And that's because 99% of stablecoins are actually denominated in USD and backed by USD. And what this act does is it separates high quality and low quality stablecoins. It permits and gives a platform to high quality stablecoins, and it doesn't allow low quality. And so what is high quality stablecoins? They are stablecoins that can be redeemed for a US dollar at any minute. And what we're seeing is we're actually not seeing these stablecoins become that prevalent in the US market. We're seeing them in emerging markets as means of making payments. And so the promise of a stablecoin is the ability to make a payment anywhere in the world in under a second and for under a kobo. And so we get the opportunity to now see there are over $250 billion in stablecoins And just in the last quarter, we've seen over $5 trillion transacted using stablecoins. And so that's even before the Genius Act has come into place. So we're at the point of this digital asset revolution, and the future is going to be written through stablecoins.
All right, so, definitely stablecoins are already widely used, for remittances, trade, dollar savings. How might the Genius Act, change how, countries in Africa actually interact with stablecoins, really? Because some might feel like, okay, this is happening in the US, we're over here in Africa, we might not see that much impact.
Bitcoin and Ethereum have a lot of value as stores of value. So what they do is they enable, because there's a fixed amount of resource, you have an indication that over the long run, that currency could go up. However, they're extremely volatile. And so if I have Bitcoin today, I don't know if it's going to be worth exactly the same amount tomorrow. It could be down 5%, it could be up 10%. However, stablecoins are just in that they're stable. And so when we think about transacting across borders and trying to do that instantly and near free, stablecoins are much more reliable in doing that. And so if I want to make a payment from Nigeria anywhere in the world, stablecoins provides the technology for that to happen instantly and for basically free.
Yeah, basically free. And, definitely, I guess that's why we see some remittances coming through, stable coins at this time. But, for African fintechs, building on stablecoin rails, what new opportunities does the, Genius Act unlock for them?
It gives a lot of credibility to what we've been building, including JuicyWay. So JuicyWay, the company that I'm the co-founder and COO of, we are founded on the mission to ensure that Africans can engage in the global marketplace on equal footing. And our goal is to ensure that a Nigerian can make a payment anywhere in the world in a second for under a kobo. And so the Genius Act lends a lot of credibility. We've seen massive market adoption. As I mentioned, we're up to $250 billion of stablecoin assets. That's growing meaningfully week over week, and transaction volume is up to $5 trillion. And so we're seeing the US accept this reality that countries like Nigeria have already known, because they have needed ways to make payments globally, and stablecoins make that a whole lot easier.
Right, but on a side note, so we have the Genius Act, coming out from the US. What do we tag the one that's going to come from Africa?
The Genius Act sets a pretty good template and foundation for regulation globally. JuicyWay for a long time has only worked with high-quality stablecoins that are now permitted and clearly regulated under the Genius Act. And you could take that same approach and do that across Africa. And I think Nigeria is already doing meaningful progress on regulating stablecoins. And so what does that mean? It means take anything that is not a high-quality stablecoin. We saw a big blow-up of a stablecoin, a low-quality stablecoin, Terra, which was backed by Luna. And the reason that failed was because it wasn't backed by any real-world assets. And so you had one coin being backed by another algorithmically. And so when one started to fail, the other started to fail, and a lot of people lost money. And so when regulators approach this in Africa, they need to make sure that they do not allow currencies like that, but they do allow currencies that are instantly redeemable for the fiat currency that they represent. And so if we're able to do that, we have a leg up, in Nigeria to being part of this new digital revolution.
All right, definitely. We're looking forward to that and seeing how this space actually continues to grow. Thank you so much for coming on today. Justin Ziegler is the co-founder and CEO of JuicyWay. Thanks for coming on today.
Thank you, Lai.
And they have it behind me. It's green on the screen at this point, some recovery right there in the market. But that's how most of the markets we track looking today. Tomorrow we'll give you, again, more updates on where money is flowing. Thank you for watching. I'm Ladi Williams. Bye for now.